In this video, I'll go over Work Together, Problem 8-2 out of your Century 21 Accounting Advanced books, edition 11 by Gilbertson and Lehman. And we are on page 248. Okay, so the first part says, Praxin Incorporated has the following general ledger account balances on December 31st of the current year before it records adjusting entries. A general journal is provided in your working papers. It's right here, actually. And your instructor will guide you through the following examples. So here's what we know. In our general ledger, we know we have supplies expense, $3,200, insurance expense, $8,000, and prepaid advertising, $8,000. Using the following adjustment information, journalize the adjusting entries on December 31st of the current year. So here we are, December 31st. We know what we have is $400 in supplies. So we're going to go ahead and debit the asset of supplies by $400, and we're going to credit supplies expense by that same $400. Okay. We don't need to worry about a document number because these are adjusting entries. So really what we should have done is started one spot down, pasted it down there, and we'll do, usually you would write adjusting entries. Wow, can't spell today. Like so, right? There they are. There's our first one. Next one, December the 31st. Still on the 31st. Prepaid insurance now has a value of $600, so we got to make sure that we put that in that asset account. And then insurance expense, we'll go ahead and add the $600 there. And then finally, on the 31st, we know prepaid advertising was $80,000. So this one's a little bit different, right? We used $30,000. So we're going to go ahead and debit advertising expense for the $30,000, and we'll credit prepaid advertising. See, the difference here is in these supplies and insurance expense, we went ahead and expensed it all up front. Now we're reversing a part of that expense and putting it back in the asset for whatever's left so that it accurately shows what we used during this calendar year, okay? But in the advertising, we did a prepaid advertising on it and called it an asset right away, but we used $30,000 of it. So then we've got to expense part of it, just that $30,000. So those two are like two different ways of handling these prepaid expenses. Okay, but that's our adjusting entries. Now in part 2, journalize the reversing entries on January 1st of the year. If you look in your textbook on page 245, it says, if an adjusting entry creates a balance in an asset or a liability account, the adjusting entry is reversed. Okay, so in the case of this first one with supplies, this entry created a balance in an asset account of supplies, so we've got to reverse it. Okay, and in the case of the prepaid insurance, that created a balance in the prepaid insurance account, so we have to reverse it. Now in the case of the third one, we had a balance in an asset account, and then we took part of it away. So this did not create a balance, so we do not have to reverse the third entry. All right? Okay, so the first one, we're now on January 1st of the next year, and we're going to have to go supplies expense as a debit and supplies as the credit to reverse it, right? I really should have wrote reversing entries. When am I going to learn? Okay, here. There we go. And we're just going to change those. We're going to do a $400 there and $400 here. So that just totally took away this balance of supplies that we stuck on it on December 31st to accurately show what our asset balance should have been. Okay, so now we're going to go January 1st on the next one, which is insurance, wow, fingers in the wrong spots. Insurance expense and prepaid insurance, so that the $600 we added to prepaid insurance up above is now getting reversed out of there, and it'll be back to zero. So we have done our reversing entries that created a balance in an asset or a liability account. We did not reverse the one that started as an asset and we just expensed the part that was used, okay? That was advertising. And hopefully that all makes sense, because that's the end of Work Together 8-2, and now you can do the on your own by yourself.